Hi everyone, welcome. Can everyone else hear me?
Yeah,
Waves, good,
loud and clear,
thumbs.
mate.
Awesome, awesome, awesome. Right, well, I'm just going to wait until the numbers start to balance out and the waiting room has been disabled. So I'll pick on a few people who are generous enough to have their cameras on. Daniel, I'm going to look to you first. Thanks for joining. Is there anything in particular about today, the event that drew you along, or just generally interest in fintech and the wider space?
Can you all hear me?
Yeah,
Perfect. Yeah, no, it's just a general interest. I've been to previous ones that you guys host and always come away more knowledgeable. So
fantastic. Okay, Sebastian, again, same question to you. Anything about these guys that dragged you in, or just generally looking at what's going on?
No, just see what's going on, see the trends, how people have done in their own way, and just to learn something new.
Fantastic. And Vas, I think I'll finish on you then. Anything here that's brought you in particular? Anything you're really hoping to see discussed today? Oh, mate, your audio is not coming through. There you go. Can we hear you? No, sorry, Vas, can't hear you at all. Okay, well, just enough time then. I'll pick on Tony. I know he always likes to jump in at the beginning of these. Tony, anything here for you? Anything in particular you're looking to have discussed?
Yeah, you always pick on me.
He's going to stop coming.
He loves it. He loves it.
No, well, yeah. Well, I get to this point if you don't pick on me. So
Exactly.
No, I'm just fintech innovations. Understanding how we're dealing with people, process data, AI, the usual things that are all top of mind today. Yeah, and so just reality is what I want to see.
Okay, fantastic, good stuff. Well, we've got a good panel today. So for those of you that don't know me, my name is Barry Cranford. Run a bunch of tech communities in London, both online as well, like this, and offline. So we have been working with Turntable now for I think 5 years. We're speaking to a few guys there, and whilst most of the events we run are purely like CTO focused, there was a bunch of conversations from some of the people we're working with Turntable around making them a bit more financial and financial services and fintech focused. That led to a few conversations with Sam and then with John, and this series of events, which is the FS Tech Coffee Club. So we've had a few events so far that are focused around an area, like one particular tech area. And we're starting to move more into stories around scaling, so stories around individuals that represent interesting companies in this space, digging deeper into their stories. So it's all sponsored by Turntable, and Sam, who is the CEO of Turntable, is going to lead it from here. So Sam, I hand over to you.
Thanks, Barry. Hi, everyone. How are you doing? It's really nice to see some friendly faces, repeat offenders here, which hopefully means that we're getting something right about the format. And so in due course, we've changed it. So for the first time today, rather than me hosting a panel of guests, I'm joined by my pal John Friedman as co-host, and we're digging into a specific topic, and we've invited Wayne and Dima, who you can see here in the call, to join us and talk about those things. So we'll do introductions in just a second, but I'll talk about the format first. So this is our coffee club. The point is fairly relaxed, but in-depth conversations about topics of interest to folks in the financial services technology space. So that's my background. I've worked up and down Wall Street in London and Hong Kong and New York building trading systems, more recently teaching people how to build trading systems, and now I run a software agency called Turntable. We're based in Ghana and London, and we build trading systems for people. That's the name of the game. This is our coffee club. Coffee isn't compulsory, but I'm drinking here. This is a kind of Wegmans bottom of the barrel Arabica blend. I like coffee, but I'm not fancy about it. For me, coffee, it should be a slap in the face to wake me up in the morning. I drink a pot every day, and then every couple of months I go to the doctor's and she complains about my high blood pressure. But that's between me and her. So thanks for joining us, everyone. We're going to take about an hour of your time today, and we're going to talk about scaling stories. So our guests here, Wayne Pascoe from OptAxe and Dima Pimakhov from GoSolo. But first, I'm going to hand over to John to introduce himself, and then we'll have a brief introduction, please, from Dima and Wayne, and then John's going to ask the first question.
Everybody, thanks, Sam. So Sam and I have known each other for about 20 years at this point. Similar to him,
Almost exactly 20. Yeah.
Similar to him, worked in financial services technology my entire career, last 15 years or so at hedge funds, and now work as a fractional CTO, so covering multiple clients at once, a mixture of hedge funds and fintechs. Excited to see how this format works out. You're our guinea pigs, so let's go. Dima, over to you.
Yeah, hi, and thanks for inviting me. Like I said, my name is Dmitro, but Dima is how my mom would call it, so I don't mind. I come from Ukraine, but I moved down to England like 9 years ago, so I'm proper Brit now. So my background is I used to be a partner in a local Ukrainian tech consultancy, which surprisingly grew quite large in doing core banking transformations, because back in the day, this was a really booming market and really booming territory. So we've done quite a lot of those projects, and we've done a lot of core banking upgrades, transformations, replacements, you name it. And we work with pretty big banks around the world. When I moved to England, first I tried starting my own software company. That didn't work, but I had a good understanding of tech, and had some team with me who could build a solid fintech platform. And so we decided to apply our knowledge, working with different banks around the world, and build something here, which is GoSolo, which is essentially a fintech banking app for micro businesses, for solo traders and little entrepreneurs who are just starting their business and trying to navigate the world, and trying to grow their business. And essentially what GoSolo does is, I mean, basically three things. Is we do company formations, we do the banking part, and we do the payments, all the way from payment links to tap to pay POS in the phones. So we try to cover all the needs of a small business in just one app.
Awesome. Thank you very much. And Wayne, your intro?
Hi, everyone. Again, thanks to the Coffee Club for having us. Thanks to Turntable for sponsoring. I do believe there is a mug I need to represent my coffee in a future one of these calls. My background is a mix of large investment banks and small startups. So I've worked in front office teams at JP Morgan. I've worked in back office and developer experience at Morgan Stanley, but I've also worked in telcos and startups. I am very fortunate to be a part of the OptAxe team today. I was approached by the founders because they needed a technical co-founder a few years ago, and we went from a conversation very informally to being a regulated multilateral trading facility in the UK. And we did that with a very small team. Our goal is to bring together institutional clients, so banks, hedge funds, asset managers, and allow them to see things that today they do in very complex and inefficient ways. Things are going really well for us. We're moving along slowly in terms of customer acquisition, but because we're a platform, we have to hit a critical mass before we can completely open the doors and go nuts. So every day we go by, we're a little step closer to that, and we're very close to those. What does it mean to succeed in London?
Thank you. So our first question, we're going to speak to both individually and then a combo at the end. We're going to start with where you started. So Wayne, if I come to you first, the FX options market is a marketplace. It relies on buyers and sellers. Quite a difficult thing to break into. What was it that convinced you and your co-founders that setting up as a trading facility was the right problem to solve rather than something on one side of that market?
So the problem today, and the founders come from trade and sales desks, they identified that about 70% of the Axe inventory isn't making it out the door. Great, what's an Axe? Because that is the first question we always get. So an Axe, a declared interest that a trader has driven by positioning, client demand, or the risk that they're holding on their books. And the way that works today is these things are traded in chat, in email, and on the phone. That was fine when you might have 3-4 portfolio managers on a hedge fund that you were facing. You could manage these with real relationships. But the rise of the multi-strat hedge fund means that you're facing off against 10 times that number of people at each hedge fund now. So about 70% of this inventory isn't getting out of the bank store. That's obviously bad for the bank because they want to see this inventory moving, but it's also bad for the liquidity takers, for the people on the buy side of this. They're looking for liquidity, they're looking for positions to take. And today, the way they would do that is they would trawl through chats. They would get a load of unstructured data and they'd have to find what they want. So for us, solving the distribution between these two groups is a part of the market that just isn't addressed today. We have spot markets, we have markets for very particular FX components, but the options market is massively underserved. Not just helping these people meet each other, not just helping these people find out what's available and complete that trade, but a big part of the market today, because it's on chat, because it's a phone call, there's just no analytics and no visibility. And the fastest way to solve that is via a platform. If you can move a load of these unstructured things into a central place, you're in a position where a bank can now go and look at things and go, every time Emma lists an Axe, it gets out the door. Every time Bob lists an Axe, it takes twice as long. What are we doing different? What can we learn? So as well as actually bringing that liquidity into the market, a platform lets us work out how to use your liquidity better and how to move it around. So for us, that made absolute sense. Rather than starting on one side of it or the other, obviously we made our own lives more difficult because starting on one side means you can just serve a number of customers and have a built-in base above you. It's quicker to go live. But starting with a platform means that we can actually address an initial need and build on that as we go with a big future for our product.
Very nice. So pivot to a different market with GoSolo.
Yeah, so for us, it is of course quite different, and our basic customer is essentially like a plumber or an electrician or a yoga teacher, or somebody like that, and it's usually one man band of a person who does everything, who does the business, does the admin, and all of that. And more often than not, they are not. They don't have any experience in running a business. So when they start, they have the trade skills, but not the business skills. So even though in the past maybe few years, there are quite a lot of tools that appeared on the market which kind of individually try to help solve one task or the other, there is still not enough apps or tools which kind of cover end-to-end the needs of a micro business. At least that's our opinion. And of course, you can individually sign up for a business account. You can individually sign up for a payment platform such as Stripe or something like that. But then on on the little entrepreneur side, it's a hassle signing, applying for each of those tools individually, making sure they match, making sure they work with each other, making they don't conflict, etc., etc. So for us, the gap in the market which we saw is building something which will end-to-end cover the financial and business needs of an individual who doesn't have much of experience running a business, but he's almost forced into doing that through whatever the life takes them for.
So I know when we did our prep call, I'm cheating because I sort of know the answers to my next question. It sounds great, and there's a bit of survivorship bias in this when you talk about how you started and where you are now and all your assumptions turned out to be right. But can you both talk through maybe something that you assumed about your market or your product at the start that turned out to be wrong, and how that changed your direction?
Dima, do you want to grab first?
Yeah, I guess one thing I like that we kept, and two things which we dropped from from the beginning. So the item that which had to be in our MVP is company formation, because by the time we were launching, we already had some competition with the likes of Tide and maybe Monzo Business and so on. And but more importantly, still the larger competition are more traditional banks. And what we feel was really crucial is to have company formation element. So because we want to be absolutely on day zero, your provider of choice of the financial services. So to have the company formation element enables us to become the first platform that the user gets the account, the business card, the payment card, and so on and so forth, and they don't need to apply for anything else. So that kind of stayed, and that works. The two gimmicks that we had built but they didn't pick up is number one was cash forecasting, when we wanted to produce some fancy graphs and like forecasts of how much money you're going to have maybe 1 week, 2 week, or a month down the line. The technology behind that was quite complicated, and it relied on a lot of user inputs. And we realized that users are super lazy and nobody's going to do that. So as nice as it looks on the design, in reality, it shows complete gibberish 99% of the time, and it just confuses people and requires too much support to maintain. And actually, counterintuitively, when we were launching, we had company formation for free, just as a marketing kind of incentive to our users. And we stopped doing that because, unfortunately, that attracts a lot of fraudsters.
Wow. Unintended consequence, big time. Yeah.
So from our side, really, the most depressing assumption I had that turned out not to be true is that better is good enough, and it turns out it isn't. Good isn't even good enough. The costs for an enterprise who are our clients to onboard a new platform are incredibly high in terms of labor, in terms of internal resources, KYC, and all of those things. So my assumption was they're over here in a cave hitting a thing with a rock. If we can take them out of the cave and give them some copper tools, it'll be enough. And that turned out not to be correct. So the product that we've ended up taking to market is a lot more refined and feature rich than what I thought we'd be able to do at an MVP level and have accepted into our customer environments. We've had to go way past that to make it worth their while to do the work.
That's very interesting, and we might touch on this when we talk about understanding your customers. But that problem, Wayne, about managing your runway sounds quite a challenge, because these two businesses are quite different. With a B2C model where you target consumers, you want to show your clients you aren't a viable business until you have lots of them.
Yeah.
Whereas the marketplace it's turn it on and then the magic happens.
But you've got to have enough to get people to be convinced to land on it when you turn it on. Yeah.
I was
really
thinking about Dima's graph and how many user inputs. I think anybody that's started a business and has used a small business accounting tool that provides that view of your financial runway, that kind of burn down graph of when you're going to run out of cash, has gone through the process of thinking, this is my Bible, right? This is the one metric that matters because I'm a startup founder. Cash is king, and I should check this every minute to see when we're going to run out of cash. And then realized it's completely worthless because the numbers are wrong, and that you should get back to basics and run your business. I've certainly been in that position. That's a fascinating insight. I want to talk about building in a regulated environment, which is not for the faint-hearted. And I'd like to start with Wayne and ask about working with the FCA and what a high bar they set. particularly around the non-technical hurdles that you had to go through before go live. What was the experience like for you folks?
I mean, the biggest kind of non-technical hurdle was finding a sufficient supply of whiskey to get through it. I kid a little, I guess. So building a multilateral trading facility is without a doubt the hardest thing I've done in my career. I'm incredibly proud of my team who did it. We did it well under market averages for delivering these things. And we did it cloud native. So a lot of the assumptions around multiple data centers with different distances between them, we had to do a lot of things the hard way. One of the biggest problems is you're doing two things at once. So we set up to start a business. We had a great business idea and we were all in on building that business. But now you've almost got a second job and you can choose whether to give away money out of that very limited runway you have to experts who can go and deliver those things, or you can choose to go and find the cheaper whiskey and grind it out and do it the hard way. You're spending that runway on things that don't translate to product features. There are things that your customers are saying, I really want. And the things that you're building for the FCA are absolutely essential over here. But as a smaller firm, you'd be able to get revenue coming in the door before you go and spend that money as an unregulated firm. As a regulated firm, you're front loading your spend. And really kind of managing those resources through one of the toughest experiences I've been through, keeping the team upbeat, keeping people focused, working out everything you have to do was super tough. The FCA operate what they call a signposting approach. So they won't just tell you this thing in your document is wrong, it needs to be this. Obviously, the MiFID rules are all out there, but there are dozens of various technical standards and business standards you have to hit. Having that expertise in-house is impossible for a small firm. So it's working out where do we spend, where do we learn for ourselves, and where do we put that very limited runway so that we can go back to building the features that our customers want. And it changes everything you do. A meeting that would normally be 4 very key people sitting around a table talking needs to be in a minuted format, recorded, persisted for a certain number of years. Most companies aren't trying to actually go fast and build in that stage. So every single thing we were doing, you'd go out to a customer and they'd say, well, we can't talk to you until you're regulated. So that moves your potential revenue further down. The work you're doing, the complexity. I think I talked recently about time services. Pretty much everybody who's built anything technology-wise knows I synchronize my clock with a tool called NTP or PTP. It's a pretty simple answer. To be an FCA-regulated firm, you have to dive down into where your cloud provider's clock is. Why isn't it on a European list of approved clocks? And it's things like that that really stretch you well beyond what your normal expertise level is. We got it done. We're an FCA. We got our authorization. So clearly, the FCA do not give these things out lightly. I think one of the things we can say is the credibility it's brought us in the marketplace, having gone through it, is incredibly high. When we go into a bank to answer a request for quote, request for pitch, things like that, we're able to answer their questions. We're able to go, here is why we think we're good enough for you.
Thanks, Wayne. And you can answer that question, probably the few amongst us that can. Where is your clock? Since we all moved to the cloud, there's so much abstraction over actual bits and bytes, and regulation is pulling us back. It's really interesting.
Absolutely. I mean, AWS actually does PTP in a number of data centers, which gives you far more accurate sync, but not in the London region for some reason. AWS and Google both do NTP across all of their regions. You're never more than about 3 hops away from your clock, depending on which site you're in. And they all have GPS clocks that if you nag your account manager enough, they're prepared to share with you to take to the regulator to show what GPS clocks they're using, what their accuracy levels are, and how that translates into drift for you. We also built more Grafana dashboards and Prometheus time sources than I ever wanted to. So we have auto healing. When a clock drifts, that node just gets taken out now. So from how do we synchronize our clocks to having an entire workflow around heal that node and move the workflow became a requirement.
Well, if the MTF thing doesn't work out, you can always do time as a service. So you've built all the infrastructure.
I know a great guy for that. We talked to some amazing people. There are some incredible solutions in the London market already.
It's good to know. That's a much deeper well of very niche knowledge than I ever thought. Sometimes I don't know what day of the week it is. I think there's some people dropped some stuff in the chat. Firstly, thanks to Sir F for hoiking the Scottish Malt Whisky Society. I have been a member, and their clubhouse in Farringdon is a delight to behold. And I think it's Wednesdays they serve food, so strong recommend there for you, Wayne, if you want to keep that habit kind of at a high level, high class. Folks, if you do have questions, this is a fantastic panel and the discussion's going really well already. There's a couple of points that we want to make, but if you do have questions for the folks, please either raise your thumb in the reactions in the bottom of the screen, or drop something in the chat. I'm keeping an eye on the chat. Or if you like, it's a fairly small group, you can come off mute, and I'm probably going to spot that you've done that, and I'll come in and ask you to speak up. But I want to take that regulation conversation over to Dima, who's in a slightly different place and probably more focused on know your customer, right? So what's your kind of regulatory exposure in the business startup space?
So we've gone with our previous banking platform. We were FCA-regulated as a e-money provider. With our current banking platform, we don't need to be regulated. So we kind of technically we lost that the license, but we are still able to provide the same level of service. So we had to go through quite a lot of quite strict processes, just like probably not as serious as Wayne was describing, but still it was quite it was actually quite nerve-wracking because nobody has straight honest answers. What do you need to do? You just need to do something which will make everyone happy, but it's and you're always like, why didn't you tell me ahead? Why didn't you tell me like 3 months before? Why do I find out a bit now? This is like, I only have this money left to launch, and now you're telling me I need to do this. So it's a quite horrifying experience, which we completed it. Now through whatever arrangement we have, we don't need it, but basically the muscle memory remains, and our processes are pretty much identical to what we had when we used to have a money license. So if anything, they became even more sophisticated. So it's all the same stuff.
Because you went through the rigor of getting the license and then realized that aside from the license, there were presumably some benefits to having that rigor. And I mean, you're still as you're in the banking space and the payment space now. Those are what you provide to your customers, but presumably you just front end kind of white label other systems from other providers.
Yeah. So in our pre-chat, I was telling that we used to have one kind of banking rails, and now we are using a different one, and through some sort of dark sorcery, our new arrangement doesn't require us to have the license, which I would actually prefer to keep it, but the new guy said, no, we explicitly don't want you to have the license, and we are kind of under the umbrella, which the regret here that I have is exactly what Wayne mentioned, is when you lose the license, you lose a little bit of credibility, and it feels like everyone looks on you a little bit smaller, whereas the level of service you provide and the way it looks, the way it feels, it's absolutely identical. So, but there is an element of that, and we were almost kind of forced into this situation, which at the end of the day, it works fine. But we do have full KYC, full AML process, just like everyone else, and we have all the rest of the compliance regulations, reporting quarterly on complaints and whatnot, and catering to all the little things that FCA issues on periodic basis.
So in the spirit of kind of licensing being better and more rigorous, I guess a quick fire question, if I can, for both of you is, what would be a compliance principle that you wouldn't compromise, that brings you so much other benefit that it's something you would never give up?
So given my aversion to jail, it's obviously all of them. I like living outdoors. Realistically, for us, it's ethical conduct. We want to create a fair marketplace, and that means being transparent. It means if a customer believes something should happen and we've built that into the platform, that's something we won't budge on. We ensure that if you give us data, it is sacred. If you give us data that only X should see, only X will see it. But at the same time, if you want to go wider, we will make that happen for you. For us, our reputation is incredibly important. And because of that, that ethical conduct is what keeps the gate open to the next customer, the next trade. If we were to ever fail on that, it's not a thing that you get to come back from. You have to treat your customers fairly. You have to give them the things you've promised them, and you have to do it in a way that's completely transparent and above reproach.
Thanks, Wayne. Dima?
Yeah, I would support that. Like a good Boy Scout, I adhere to all the regulations that are set out in terms and conditions on our website. Um, I think in our case, the challenge that we have is most of the, I mean, legally we are dealing with legal entities, but the legal entity is often 0 days old, so there is absolutely no history about it. So at the end of the day, we have to dig a lot deeper into the individual's background and do all the checks, really deep checks on the individuals rather than the company, because the company is pretty much meaningless. And this is the area where there are some black and white cases and there are some edge kind of cases where I feel there are some players on the market who prioritize growth, and they would be happy to accept the client and just hope that down the line nothing happens. And probably we're a little bit more stringent, and all of our platform was built on an idea of extremely fast onboarding. So we have like literally 5 steps to complete, and you have your company, your business account, and your payment rails set up. However, through evolution, we have added a few artificial roadblocks on that route, and we now have, and we perform a lot more manual checks and a lot more like OSINT research on quite a few of our users to physically prevent bad players joining the market. So that's probably our evolution of how we approach onboarding and KYC.
Nice. So we're going to move on to talking about customers and who they are, how you find them. So I'll start with Dima, if I may. You're offering a service to anybody who wants to open and start a business, and some initial focus on the UK. How did you decide where to focus, and which types of users really drove your business forward, and how do they find you?
I would say a lot of initial growth came through international origin entrepreneurs, so people who might have come into UK recently, and that further kind of restricts the experience of how to approach the company formation, how to approach the signing up for the business account, and so on and so forth. And also, unfortunately, there are plenty of cases where if you have a non-UK passport, you will have more challenges getting through the onboarding essentially for a bank account. So this is where we have a slight edge, because I'm an immigrant myself, and a lot of people in my team are immigrants, and we are able to look at it with a wider perspective and without compromising on the previous topic conversation on like risk and stuff, but we're still allowing people to onboard. And to give you an example, there are lots of Eastern Europeans working in construction industry, like Polish, Romanian, etc., etc. There are lots of other immigrant minorities who work in retail shops and so on. And often it's mouth to mouth, but also, for example, for the construction industry, we found a life hack of working and partnering with training centers who prepare the workers for all sorts of construction regulated stuff, like I forgot the names, but basically they need to go through health and safety training of sorts before they can start working on your boiler and something like that. So they all go through that, and while doing that training, they're also introduced to GoSolo because that's an easy way to set up and actually start their business. So that was one of the early hacks that worked for us.
Oh, that's fascinating. It's a mixture of picking a market that's harder than the default because it opens up customers that are underserved, and that life hack model is also really useful. So there's parallels for anybody where you find other companies or businesses or organizations that market to the people you want to market to and partner with them. It's very interesting. So on a different side of things, smaller marketplace, Wayne, traders are wedded to their chat, whether that's old school voice or Bloomberg chat, typing things in. How do you convince them to change how they work if they've been doing it for years?
We've got a couple of advantages, really. I mean, the first one is traders are wedded to a lot of things, but the thing they're most wedded to is money. And if you can find them a way to make more of that, they're going to talk to you. So they will accept a new piece of workflow. But we do a couple of things that are really important. We don't disintermediate the relationships. If you look at the broker model, if you look at a lot of the other models out there, somebody is now sitting between you and the person you're trading with, and you go blind to that. It becomes a very dark thing for you. As a trader, you really value your relationships. London, the trading world is built on relationships, and the co-founders at OptAxe come from desks, from trade roles. So they've got this huge network. Yes, traders love chat, but it's also fairly blunt. When a trader puts something out on chat, it's like, I've got X and it's Y, and then you start a negotiation because we're an over-the-counter product. So you go, well, I'll give you food. And the problem with that is you can't say, okay, I just want to show this to my 5 highest value traders today so that they come and talk to me next week. And OptAxe provides the tools for that kind of slice down. You can show up on the platform today and say, I only want to show this X to the 2 hedge funds that, I think I'm going to get the best price out of. Or I'll show this X to 5 hedge funds, but 2 hedge funds will get a better price. And they can't do that on chat. So it's a very easy step to say, hey, here's all of this extra stuff you're getting. But year on year, we become a more regulated environment. We probably all can name a finance scandal at some point. They make tech jargon look tame. So, work out what LIBOR rates are and you can find a scandal. And that means that traders are increasingly answering compliance questionnaires. What did you do here? Why did you do it? Who did you do it with? But a platform gives them irrefutable traceability. At this second, on this day, I listed this thing. At this second, somebody asked me for a quote and I told them this. At this second, we traded it. So a lot of the conversations that today are high friction in an environment for traders where they have to justify themselves and go through and audit everything and report to their desk manager, all of that suddenly just becomes a thing that happens. And that's a very, very big win for these people. Our biggest problem isn't persuading our users to use the tools. That's turned out to be super easy. Our biggest challenge is actually getting their enterprises to onboard us. We talked a little bit earlier about the fact that, you know, most enterprises today are hesitant to take on a new platform. And that's where things like our MTF certification, where things like, you know, we're always looking for a way to make it easy and say yes. So once we have a trader inside a firm who is very keen on us, we do the rest of the lifting. We don't expect them to spend their political capital trying to get us in the door. We'll go and talk to the people. We will do that work to find a way for them to work with us. And I think really we're making it faster. You know, they go from getting 20% out the door to getting 70% out the door. They do it with less hassle. They do it in a way that reinforces the relationships they already have instead of just going wide. So we've got a lot of things that make it really attractive to the end users. But the end users are this big in the cogs of the bank, and it's about making it important to the bank as well. That is the big task.
Yeah, that's a really interesting difference between B2B and B2C models. When you're selling to a customer, by extension, it's just one person.
Yeah.
Business to business, you have so many different stakeholders, especially in something like this, that you have to try and build features in your product that the person you're pitching it to right now maybe doesn't want, but the person sat in the other side of the building really does.
Well, it's the gap between the decision maker and the person who wants your product. In the B2B, B2C model, the person who you want to sell to is often the person who can make the decision. And in the enterprise model, the person who can make that decision often isn't incentivized to do the thing that the person who's going to be using it wants them to do. So you're really having two very different sales pitches there.
They're really, really valuable. So I'll do a quick fire one to you both. What's the most surprising bit of customer feedback you've received that you're able to share with us?
Dima?
To be absolutely honest with you, quite often the less we know about customer feedback, the better. It's kind of almost like it should be smooth and just work. I feel like, of course, we sometimes, if I'm personally or my support team engages with customers and resolve some kind of an issue or points them with some kind of a feature that we've built which does something in a smart way, they are happy. But generally speaking, I don't think either one of you go on your whatever the personal bank you're using and just writing a really excited review on the Google app like, oh, I'm so delighted to use this Barclays card today. Nobody is ever going to do it. You're only going to do it if something is completely horrible and you hate them and you're just going to put -5 stars and you want them destroyed and shut down by FCA yesterday. So it is mostly in our case is when things are quiet, things are good.
That's interesting. I know you talked about referrals as a way to win business. I guess that's a visible metric you can track because people don't refer things they don't like.
Yeah, true, but even that is kind of tricky, and it works much better through the kind of partnerships that I talked earlier, like if it's a training center or like maybe a franchise group or something like that. And again, I don't feel like electrician to electrician are going to say, oh, look, I found this amazing bank. Like, I'm so excited today. Let me share it with you. Unless you put some crazy price tag on it, which would just make it worthwhile, their banter.
Nice. And Wayne, how about you?
So the first thing that has surprised me is how many people will give you feedback. Especially when you're in one-on-one environments and you're having conversations, everybody wants to feel included. Everybody wants to give you feedback. And that varies between the super kind of detail, I think it'd be great if it had this extra flag, and thus is born scope creep. Or it comes down to something around the feedback we've had around how many people have validated our business model. I'm a naturally kind of risk averse person who is looking for what's going to kill me. Going out into the market and having so many people say, yes, we absolutely need that. This is something we'd be behind. I think this is probably the first business I've been in where that message has been so clear. From the actual end users, it's been a very easy sell. And sometimes you've got to pinch yourself because that's a great place to be.
Yeah.
It's really nice to get that kind of positive. Like, I remember I hired someone into a leadership position at Turntable one time, and after a few weeks, she said to me, "This is the most enterprise-like startup I've ever worked in." And it's like it wasn't positive. Like, I was always taught it's not negative feedback, it's constructive feedback. So it's like it's not positive and it wasn't constructive. It was just like left field. It's a very like weird thing to hear. I think we're at the point in the chat where we can talk about scaling. So I want to hear about what traction looks like. And I think, Wayne, if we could go straight back to you first, because it sounds like you've got this kind of two-phase model of growth, right? Where you're like building the marketplace. And then once you've built the marketplace, you're then trying to get people on it, right? So what does traction look like for you, and how is that going to change once you've hit the tipping point?
Well, good news is we're never going to stop building the marketplace. There are so many things that need to be solved that if you're a developer at OptAxe, you've got work. Don't worry about it. For us, there are long-term and short-term, what does traction look like? And in the very short term, it's about the increasing use of the platform. We're not a Netflix. We don't want you to be on our platform 12 hours a day, but we do want to see more liquidity week on week. We want to see people trusting the platform and loading more inventory. We want to see a very high rate of, I searched for something, I traded something, because to us, that is success. Somebody can spend 4 hours on the platform, and that can actually be a very negative thing, versus somebody who spends 30 minutes on the platform, comes in, finds what they're looking for, and moves on to their next task. We're not a social media site. We're not somewhere that you have to stay. But another massive thing for us in terms of scale is today, and we've talked about this in the relationships and traders, everybody has their favorite relationship. But quite often that means a lot of your tier 2 and smaller organizations are overlooked. I never call, I don't know, ANZ as a random example for a quote on something because they're just not on my top 5. And if I haven't found it in my top 5, I go somewhere else. A platform like OptAxe, for us, that kind of traction, that ongoing, is where we start to match people with providers they wouldn't normally have talked to. So even though you've got a legal relationship with somebody and you don't talk to them, if we suddenly start seeing those smaller players being able to put inventory out and that liquidity moving into the markets, for us, that's a massive sign of scale. And that'll obviously drive the number of transactions and the volumes, but they're less important to us than who is trading with whom.
Thanks very much, Wayne. And Dima, you talked already about partnerships in interesting places. Like, what could you talk a bit more about that? You spoke about plumbers and builders and folks who, like, there are niches of people who, once you start thinking about it, they are in the business of setting up their own businesses. What's proven the most effective for you in that space?
So again, back to our history. So we almost like launched twice, and when we launched first 4 or 5 years ago, the growth was almost organic because there were multiple things happening on the market at the same time. There were a few competitors, but who were effectively dragging us with them by promoting like a digital first business banking, like all in the app, all nice and shiny. You don't need to go to a physical branch, all of that jazz. So initially, very basic, very standard marketing techniques worked reasonably well. So all the like absolutely standard, like pay-per-click or whatever banner advertisement and social media on Facebook, on Google, all of that proved quite effective. And to our um, negative surprise, I would say, when we relaunched maybe a year ago, that ship has sailed. So now I still use a bunch of competitors' accounts just to understand what's going on. And like the other day, I saw Revolut offering me £600 for a referral. Now I will never be able to compete with that kind of money being thrown in. So even referrals is a difficult path to pursue when we are now competing with those huge kind of Titanic uh, businesses. So we are exploring new ways at the moment. All sorts of partnerships work. Like I said, also we stepped away from spending on Google and Facebook, and we are investing in maybe something slower, but something where we can carve ourselves some small niche and work with a selected customer group and speak to them directly and explain not to just general businesses, but maybe specifically to, I don't know, car detailers. How would they use our app on day-to-day basis? How would they help? How would they get paid faster? How would they get paid cheaper, how whatever. So it, it becomes much more granular, and we have to be extremely specific in finding the niche and addressing the niche. It cannot be just, oh, we are a digital business account for small businesses. That doesn't work anymore.
It's become much more high touch, right, in your business. I guess that's just something that shifts as the market matures.
Yeah, absolutely. I think it progressed and matured a lot, and now it's a different game.
Okay. Wayne, there's a question in the chat for you from Tony. How do you manage the legalities in terms of KYC and FCA regs in your platform and all of the entities who trade and transact on your platform?
So there's a mix of stuff we built and stuff we outsource to other people. Our contracts are the legal entities we contract with are other organizations. So they're pretty easy to do due diligence on. But we have an obligation to ensure that every trader on our platform isn't subject to sanctions, to any kind of high-risk person things. And some of that we outsource because there are some great organizations in the fintech scene in London who've solved some of those problems. And I think that's one of the things I love about building in London. We have these great networks and we have these great people who are all doing things at the same time, that it's really easy to find people who want to help you and who you can also help take that next step up. The FCA regs are built into the platform at almost a DNA level. So for a trade to happen, certain things have to happen, and that's just built into the workflow of the trade. Nothing's ever going to change that. And an example of something, we have to do trade surveillance to avoid another LIBOR type incident. So every single trade that happens ends up with us recalculating a load of things, and we immediately raise alerts into a complete workflow system that says a potential market abuse risk has fired, go and work it through to conclusion. So it's that mix of buy versus build, and I think, look, I'll probably be the first to complain about how difficult some things are, but because the FCA's regulatory process is so comprehensive and such a high bar, it's very clear to us what we owe everybody, what we owe our customers, what we owe the FCA, what we owe other regulatory authorities. And because of that, we could actually, while going through our regulatory application, implement the solutions for each of those.
Nice. Just picking up on Dima's point around marketing to different niches, that's something anybody who's starting a business should focus on. I want to make the point that just because you're creating content or targeting your sales at a certain niche doesn't mean you can't take clients and customers from other niches. It's just about focus. And when you're small and growing your business, focus is very important. So now we're going to move on to our final quickfire round with Sam.
Yeah, it has to be quick fire. We've done a great job, and we're in the last 5 minutes of the chat. So, folks, if you do have quick fire questions for Dima and Wayne, please speak up now. But I'm going to jump in with some forward-looking questions. It's always like a fun part of running a business where you let your mind wander a bit and dream the dream and think and hope about what things could be. So, Wayne, you first, please. If you kind of pan and zoom out 5 years, what does OptAxe look like? What's the position in the market? What does the market look like in the FX options space?
I mean, obviously, we want to be the place you come to post your inventory or where you come to find your liquidity. But today we're targeting FX options. We're obviously going to move into other instrument types so that we can cover more of that market. One of the big things that I think we'll be able to offer our customers is trying to deal with some of the large enterprises is slow. The more things we integrate into our platform, the more of the large established providers we can integrate. And there are NDAs that stop me giving useful examples, so I'll just wave my hands a bit. Yeah. The more useful our platform becomes to you. And I think one of the biggest things for us is to help, today there's an equities tape. There's certain tapes I can go and find out what the value of an Apple share was at this time. That just doesn't exist for other kinds of instruments. And I think one of our big hopes is we can become that source of record, that we can be the place that you go, because there's so much volume happening over there. We believe that the price it traded on over there is the actual market price. And that gives us that ability to say, OptAxe isn't just a place we trade, it is the system of record.
Incredible. Big hopes there, Wayne. Thanks very much. And Dima, what about you? What's the next frontier?
There are two really. One obvious one is finance, because all the small businesses need finance and some kind of credit, but that requires at least some kind of history before we can enable that. We can do that operationally even now with our banking provider, but we cannot do it, let's say, logistically, because there is nothing to base the risk or anything, and there's no collateral, no nothing. So that's a bit hard, and that will definitely happen, but sometime later. And then another obvious one, from all the challenges with marketing, we feel the UK market is very, very mature and very saturated, but that's not the case with Europe, and Europe is quite patchy, and there are lots of very big areas, very big countries where the level of service that we get here for small business banking, it's pretty much not available. So I just returned from Italy. I mean, that's extremely traditional, and places like that. So another area where we are kind of, I would say, dreaming rather than doing anything specifically, is scaling to Europe.
Nice one. Loads of opportunities there in the credit business. If you can see things like invoices for folks coming in, like cash management for small businesses can be really challenging, particularly intraday cash management, when you might have money going out at the beginning of the month and money coming in at the end of the month. If you can see folks' banking details and their invoices, then it's a great opportunity to manage the spread there. Quick question from Tony again for Wayne, and this one's about simulating trading scenarios using what-if environments. Is that something that you provide at OptAxe?
It isn't something we provide at OptAxe. If you go back on my LinkedIn, a couple of conversations, you'll find a great back testing provider in Beacon. We are really about live trading, and actually one of the things that we have to be very careful about not allowing is anything that would look like spoofing the market through simulations.
That's a really interesting little regulatory itch there, I guess. Fantastic. All right. Well, as soon as we're done here, I'm going to go into the Revolut referral farming business. It sounds like they're offering 600 bucks a go. So thanks.
600 quid, not bad.
Dima. Yeah, John, I'm there first. I'll front run you. Thanks very much to my co-host today, my old mate John Friedman, and to Dima and Wayne for joining the panel. Thanks to all of you for coming out today and joining the coffee club. Do keep an eye out on LinkedIn for the next session, which we're all looking forward to. And I'll hand back to Barry to say some final words.
Thank you, Sam. Thank you, John. Thank you, Wayne. Thank you, Dima. And thank you for everyone who's been here to enjoy that. As Sam says, we've got more coming up. Unfortunately, he is himself moving in a few weeks. So we're going to have a little bit of a gap in there. But the good news is he's moving to London. So to be closer to us all, which we're all very excited about.
I hear it's the center of the world.
It is. You just heard it. So yeah, thanks again for being with us. If anybody fancies it, we do run some lunches as well in London with Turntable. So if anyone fancies joining us for one of those lunches, then please do let us know. If anyone would like to be on a future version of this, then give myself or Chelsea a shout. And otherwise, we will see you on the next one. So thanks again, everyone. We'll see you soon.